Article 22, taxation of capital. Taxation of capital. Taxation of capital. Taxation of capital follows taxation of income. Follows taxation of income. The state, you have R and S. The state which is given the right to tax any item of income. The state which is given a right to tax any item of income, that state is also given the right to tax the capital from which that income arises. The state which is given the right to tax any item of income, that state is also given the right to tax that capital which gives rise to that income. So that is why I say the taxation of capital follows taxation of income. They are complementary. Taxation of income is complementary to the taxation of capital. Taxation of capital is complementary to the taxation of income. Article 13, capital gains. Article 13.1, 13.2, 13.3, 13.4 leave it, 13.5. Article 13.1, remember capital gains arising out of alienation of immovable property given to estate. Immovable property, estate. Here you will have Article 22, you will have 22.1. Article 22.1, and it will have same wording, same concept, that the capital represented by immovable property, the right to tax that capital is given to state S, that is the state of location of the immovable property. Same 13.1, 22.1. 13.2, movable property, alienation of movable property belonging to PE. Alienation of movable property belonging to PE. Gains arising out of such alienation, the right to tax those gains given to S state. P property, S state. Here you will have 22.2. Capital represented by movable property of a PE. The right to tax the capital represented by movable property belonging to a PE. The right to tax is given to, again, S state. S may tax. Fine. 13.3. Ships and aircraft operated in international traffic. The right to tax the gains arising out of alienation of ships and aircraft operated in international traffic. Right to tax given to R state. R shall tax. Ships and aircrafts. Aircrafts. R state. Here also you will have 22.3. Right to tax the capital represented by ships or aircraft operated in international traffic. The right to tax given to R state. 22.3. Fine. 13.4, skip that. 13.5. any other capital gain not covered by 13.1234 R state. R may tax that capital gain. So here you will have 22.4. Any other capital which is not covered by 22.1234 R shall tax. So it is virtually a mirror image of 13. Yes or no, Arvind Chetna? Is the scheme clear, Chetna? Let us read 22, Article 22, page 41. See this. Page 41. Chapter 4, Taxation of Capital, Article 22. Capital 22.1. 22.1. Capital represented by immovable property referred to in Article 6. Let us draw the diagram. RS, R and S. Okay. Immovable property. X. Point 2.1. Capital represented by immovable property referred to in Article 6 owned by a resident X of a contracting state R and situated in the other contracting state S may be taxed in that other state S. Arvind Chetna, clear? 22.1 direct correspondence with 13.1. If you want, you can just flip the page and come to page number 37. Page 37. 13.1. Gains derived by a resident of a contracting state. Gains derived by a resident X of a contracting state R from the alienation of immovable property referred to in Article 6 and situated in the other contracting state S may be taxed in the other state S. Fine. So 13.1, 22.1. 22.1. Capital represented by immovable property referred to in Article 6 and owned by a resident X of a contracting state and situated in the other state S may be taxed in the other state. Right? Once more, capital represented by immovable property referred to in Article 6 owned by a resident X of a contracting state R and situated in the other contracting state S may be taxed in that other state S. Right? 22.2. Capital represented by a movable property forming part of the business property of a permanent establishment which an enterprise of a contracting state has in the other contracting state may be taxed in that other state. Quickly. So you have R, you have S, you have RCO, resident, and then you have P. And this is the capital represented by movable property. Let us read. Capital represented by a movable property forming part of the business property of a permanent establishment which an enterprise RCO of a contracting state R has in the other state contracting state S may be taxed in that other state S. Right? So this is your 22.2. This is your 22.2. Article 22.2. This is your 22.1. And 22.2 is directly is a mirror image of your 13.2. Right? 22.3. Capital of an enterprise of contracting state that operates ships or aircraft in international traffic represented by such ships or aircraft and by movable property pertaining to the operation of such ships or aircraft shall be taxable only in that state, that is R state. Fine. So you have R, you have S, ARCO is the shipping company. This is international traffic. This is 22.3. Let us read. Capital of an enterprise, ARCO of a contracting state R that operates ships or aircraft in international traffic, represented by such ships or aircraft and by movable property pertaining to the operation of such ships or aircraft, shall be taxable only in that state R. So 22.3 directly similar, matching with 13.3. Last, 22.4, all other elements of capital of a resident of contracting state, all other elements of a capital of a resident X of a contracting state R shall be taxable only in that state R. This is your 22. No difference whatsoever. One-to-one correspondence with 13. 13.1, 22.1, 13.2, 22.2, 13.3, 22.3, 13.5, 22.4.